section on macro. Okay, so we're going to do a super quick scoot through. The next 2 weeks are going to be pretty important. Why are they going to be pretty important? Because it's reporting season in the States again. So the market moves from macro factors to micro factors. So what are Tesla's earnings? What are JP Morgan's earnings? Things like that, right, now become incredibly important rather than saying, should the S&P be at a new high? So we're going to do things like rotate within the market. So think about the way that you reframe that is the next couple of weeks or so, you start to think about those micro individual shares. Now, what does that mean for us? Because we're foreign exchange traders. It means that in all likelihood, the S&P, which has been rallying pretty hard over the course of the last few weeks, Paul, if you wouldn't mind sticking a S&P 500 chart up there, it's getting towards some of my price projections as well too, which there's some Tom DeMark price projections up at about 41.40, 41.50 area, and we're very close to what they call a sequential setup, sell setup as well too. So I view that the stock market's going to be very interesting this week for two factors. Number one, I think it'll stop going up. Number two, I think there's going to be individual shares which are going to do incredibly well and some which are going to be absolutely trashed. So that's the stock market. As always with these things, the current themes of the themes du jour right now are inflation, and probably thinking about it, inflation. So what I mean by that is there's inflation coming, and it's now pretty much been priced in by the market, I think, as I'm going to put it in air quotes, the recovery trade. That's out there. Okay, so what do we then have to respond to? So what we have CPI coming out this week in the States, which is going to probably come out a little bit higher than people expect. Let's speculate that. But people already have pretty crazy expectations for where they think inflation's going to come in. I think the estimates are something like 1%, so to give us a 2.6% on the year in the States, right? That's going to sound like a lot compared to where it used to be, but 2.5% inflation doesn't sound like a lot to me. And I think the key thing about this is there's a global supply chain readjustment going on. So what has happened the last year is just about every single business in the entire planet, because of the COVID pandemic, has decided to run down every stock and every inventory collection they have. They're now trying to rebuild that, hence the reason why nobody who runs a business can get any product whatsoever if they're shipping it internationally. You just cannot find it, or get a ship, or get a container, or any of the above. Okay, so you're struggling, you'd like to sell more, but you just can't at the moment because you've already sold everything that you have, right? So bear that in mind. We've probably got about another 6 or 8 months to go with that. And then I think the story for next year is going to be everybody's going to be overstocked because suddenly the demand might fall away, but we'll talk about that another day. The key thing for me is, one other key theme for me is interest rates at the moment. I'm going to just grab the screen for 2 seconds, Paul, and stick this up. This is a chart I'd like to share with the group today. I hope everybody can see that. This is a chart of the gold price, which is in purple, versus the interest rates, long-term interest rates, which is the 30-year interest rate. Now, what you can see is where the gold price topped out at was pretty much where interest rates bottomed out at, 30-year rate bottoming out about 1.2%, and gold, as we know, topping out over 2.5, 2,100, I think it was. And then it began its great big correction. Interestingly, it began that correction as interest rates have been rising. Now, what you've seen over the course of the last 3 weeks is that rise in long-term interest rates stabilizing. So what does this mean? This is some of the reason why those foreign exchange trends out there, right? And think about this, right? It's the interest differential, but it's not. It's the rate of changes of interest differential that the markets look at, okay, for thinking about how they view currency pairs. So that has implications for us. And when we see these interest rates starting to stabilize here, that those spreads could start to compress, that means the dollar will probably, US dollar will probably fall away a little bit over the course of the next few weeks if interest rates come down. So my call at the moment is I'm seeing probably a short-term top in these interest rates. I suspect they're going to come down a little bit. Wind that into something happening in asset markets, maybe even a stabilization of stock markets, I think, would cause interest rates to become more attractive. So people will move back into bonds because it's a better place to be. And also, for the record, back into gold. Now, Ainslie is probably going to talk more about that. We're at a pretty key junction, I think, in gold. Whoever you talk to, somewhere between 1730 and 1780 is pretty significant. Really key thing. Is the gold market going to start the next leg up, or is it just a retracement of the bear trend? Ainslie, I'm sure, will fill us all in on that. I want to leave this thought with you, though. That correlation and that and the way in which gold falls as interest rates rises. If interest rates start to fall, then what do you think is going to happen to gold following that principle? Now, normally with rising inflation, you tend to have rising interest rates. So this is our challenge now. Okay. We have to be conscious that if interest rates do continue up, then I think some of these commodities will continue to struggle, as will stocks. But if interest rates start to fall, then we're going to see a different set of patterns unfolding. So I prefer, if the interest rates are falling, you prefer NASDAQ versus the recovery stocks. And also you're looking at some of the precious metals versus perhaps some of those other commodities that have been doing very well recently. Paul, that's it for me. I could talk for ages. That's the quick wrap up.
Thank you, Julian. Got to say, I could listen to you talk for ages as well. Love the interview with Geoff today. I thought it was really good. To hope that we have more people watching that every fortnight, right? You're in with Trader Cafe, and next week you are doing...
Next week we are doing a first for me. We are doing an open forum. It's Ask Julian Anything. So anybody that's listening out there, this is how, I think this is the one that we've got scheduled for next week, Paul. This is the first time. So this is not the me talking to the trader coaches. This is not me talking to individual people. I'm talking to you folks out there. All right. So this is an opportunity for you to ask me anything about trading. If you're willing to share your problems, your anxieties, your thoughts about the world, let's talk about it. Let's wrap. We got half an hour to do it. I'm really excited about this.
And each week there's either a chance in your show to win the market, the broadcast group with the trade calls. Got a great video feedback on those. What are you doing with your trade calls? My gosh, got a guy on video saying you're off the wall with them at the moment, mate.
I'll take the positives out of that. I hope the positives ones are in there. I've been a little quiet recently, the last week or so, because I'm trying to find something worthwhile to tell everybody about. But I think things are about to change. So watch out for those calls. Love natural gas and probably hate stocks. So that's where I'm heading at the moment.
I reckon you're well above your normal 60% success rate at the moment, mate. I reckon last couple of months you've been up around 70, 80. It's just I got a video from a guy who's wrapped. He's basically making a living off following your trade calls right now. Always good to see, mate. Okay, we will see you next week on the open talkback, the open chat with anyone that wants to have a chat with you about trading. At that'll be at 4:30. Oh, I've got a 4:30 sing for that. 4:45 sing for that, as I recall it coming into this